The last way to use moving averages that we're going to talk about is by using them as dynamic support and resistance levels. These aren't like regular horizontal support and resistance levels. These lines are constantly changing depending on the price. There are many Forex traders out there who look at these moving averages as key support and resistance. Traders buy when price dips and sell when price rises when price touches the moving average. So let's look at this example here. You can see that the trend is coming down and that we have a 50 exponential moving average. You can see that multiple times price bounced off of this line. So you can see here, this line is kind of like a trend line on the upside here, on this downtrend, following along this trend. And so every time price was coming up to this line, you can see it got rejected. So this line was acting as a resistance line, dynamically following along with this trend. However, keep in mind that these are just like your normal support and resistance lines, which means that price won't always bounce perfectly off of the moving average. Sometimes it'll go past it a little bit, like you can see here, and then maybe it'll bounce back after that. So just like support and resistance zones, you can also think of the moving average as kind of a zone. Then you can see that when the market breaks past the moving average here, it can reverse directions with the trend. And if you had multiple moving averages, you might see a crossover around here as well. So then this moving average will turn into support instead of resistance like it was on the downtrend, because now we have an uptrend, and so that line is acting as support. Another thing traders will do so that they have a zone instead of a line is they'll have like a 10 EMA and a 20 EMA, and they'll wait for price to get between these levels. So you can see here kind of this white area is kind of like the zone that we're plotting out. So every time that price gets into this zone, they'll place a sell here, and then it comes down here, comes up here, boom, gets into this zone right here, place a sell trade. And then it comes down more. And then right here, when above it, looked like, hey, maybe it's breaking out, but nope, came back down here, and then boom, is back in this zone, place another sell. And so you can see by placing two moving averages on this chart, you can actually create kind of a zone between the two moving average lines. And that can help you think of this more as a zone instead of just a line. So that's about it. The nice thing about moving averages is they're always changing, which means you can just leave it on your chart and you don't have to keep looking back in time to spot potential support and resistance levels or to draw out trend lines or anything like that. They're constantly going to be moving with the market and drawing themselves. And you know that it's a good chance that the line represents a moving area of interest. So now you can go into your charts, you can plot these, you can figure out which moving average you like and kind of get a feel for simple moving average versus exponential moving average, and figuring out how you can implement this into your trading strategy as well.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.